Hello, my name is Laura Peterson, and this is a case study of Constellation brands. From MBA 690 Strategic Management, Dr. Curtis Beck's class at Concordia University. Constellation Brands has a strong family foundation. They have been guided by the Sands family since 1945. They have grown from 8 to over 9,000 employees. With 40 operational facilities around the globe, they have built a strong portfolio of consumer-preferred premium brands. As the largest multi-category alcohol supplier in the U.S., this case study will cover competitive strategy, ethical improvements, a synopsis of the 5 forces, external and internal factor matrices, SWOT highlights, BCG space QSPM highlights, financial metrics, and strategic recommendations. First of all, Constellation's competitive strategy has been a differentiation strategy in a large target market. Through lower costs and value chain activities, they've been able to invest and scale up. With market penetration, backward and horizontal integration methods, such as their multifaceted long-term glass strategy, premiumization portfolio, and as one of the quickest movers of mergers and acquisitions in the industry, they have also added a chief growth officer to fully capitalize on their long-term growth opportunities. They have utilized divestiture as needed, such as the Canadian wine portfolio, understanding that as needed divestiture is their best strategy. For ethical improvements, their code of ethics highlights their responsibility to care for people, land, and their communities. The ethical strategy can be improved by driving it from the ground up, including employees at all levels within the firm. Also, rewards can be an excellent way to incentivize employees to come forward with their concerns. Ethical violations should be made in terms of personal accountability. The firm should have a policy that states in no way, shape, or form the company says it's okay to violate ethics. In addition, a clear framework and process should be outlined for how an ethical issue will come to a resolution. When we look at the external factor evaluation matrix, Constellation's overall EFE score of 2.16 indicates the firm is average when evaluated in this manner. A total weighted score of 4 would indicate that they're responding in an outstanding way. The firm should seek additional strategies to minimize potential adverse effects, such as the aging demographics of wine consumers and the lack of digital and online sales mediums. Additional strategies should be put into place to further improve sustainability measures. When reviewing the internal factor evaluation, we attempt to answer what does Constellation do better than or more valuable than its competitors. The firm's ability to provide shareholders with strong performance was one of the highest ranked factors in the EFE matrix. Key acquisitions of Ballast Point and Charles Smith Wines will allow Constellation to further enhance their super premium wine portfolio. Certainly, there are weaknesses which are being tackled by Constellation's management by brand acquisition strategies. Constellation appears to be doing a very good job utilizing solar energy. However, they do have room for improvement in this area. Their total average score being 2.5 indicates they are slightly above average. When we look at the SWOT highlights, several key areas came to fruition. The addition of a Mexican craft brew in the U.S. market would be a strength and opportunity. Increasing research and development would be a strengths threats highlight. Looking at a flavored malt beverage and providing interesting and unique packaging to inspire millennials would be also very important in the SWOT highlight. A full-time lobbyist specializing in taxes and regulations, as well as addition of wine apps and food and wine pairing websites and blogs also came to fruition. When we look at the BCG matrix, it is important to recognize that in the industry for beer, The following chart helps us to understand that domestic beer becomes the issue here. The cash needs are very great. Constellation must be aware of the implications of the domestic beer segment and capitalize on the growth of the imported and craft beer business. Within the space matrix, Constellation Brands falls within the strategy profile of aggressive. The two competitors chosen within this analysis is Anheuser-Busch and Molson Coors. They are in an excellent position to profile their strategies in the aggressive tactics: backward, forward, horizontal integration, market penetration, and development. Within the QSPM matrix, we compare alternative feasible strategies, becoming a little less intuitive and moving away from subjectivity. The two strategies chosen in this analysis were to acquire Mike's Hard Lemonade or to open Ballast Point brew pubs and restaurants in the Northeast region. As you can see, acquiring Mike's Hard Lemonade had an overall greater total attractiveness score. However, the scores were very similar. Acquiring Mike's Hard Lemonade would be a horizontal integration aggressive strategy that would fit within the STAR profile matrix. Financial ratios for Constellation Brands has highlighted their organic growth and key acquisitions in higher growth, high margin products. They have seen impressive earnings growth. They have been named one of the best stocks to own over the last 5 years. Within the financial ratios projected, we made an assumption the Mike's Hard Lemonade had a sale price of $500 million, matching their annual sales revenue of $500 million. Several key strategic recommendations in the case study include market development. They should invest time, effort, and financial resources for market development in Asia to expand their global market share. The Asian region is seeing an increased awareness of the health benefits of red wine, indicating a trend away from hard liquor and spirits. Product and marketing development, it is recommended that Constellation Brands focus their development on creative, new, sustainable packaging which will resonate with the millennial generation. Creative holiday packaging and including promotions such as trips all-inclusive to the winemaking region of the consumer's choice would increase brand loyalty. Targeted retail strategies by increasing promotion and distributor incentives would mean we could focus Constellation's effort in targeted retail markets. Investing in consumer trends would be extremely key for Constellation to concentrate their efforts on this consumer data research to stay ahead of the curve, to modify production and capacity at least 2 or 3 years in advance of consumer trends. Due to the unique nature of wine production and the fact that grapes mature and ferment for numerous years before going to market, depletion rates can be key for winemakers. It is recommended that Constellation need to maintain double-digit depletion rates for both their beer and wine categories in order to propel their portfolio and achieve organic growth and distribution. Long-term objectives critical to the firm's core success, including marketing their products and consumption in a responsible manner, fighting underage drinking, and ensuring distributors and retailers discourage drunk driving is a particular concern for the health of Constellation's consumers. Rapid growth and being one of the largest alcohol producers and distributors in the U.S. means Constellation Brands has developed a strong leadership core. To ensure continuity and build upon that growth, they must make a concentrated effort and investment in a leadership development program, ensuring long-term payoffs for the firm. In conclusion, Constellation Brands was built on a strong family foundation. They continue to be guided by building a portfolio of brands people love, core values such as responsibility. Their differentiation and integration strategies have allowed for higher capacity and greater economies of scale. Recommended strategies included market development, product development, targeted retail, consumer trends, and improving depletion rates. Long-term objectives included social responsibility and the importance of preserving the environment. With over 200 acquisitions and divestitures under their belt, Constellation Brands will continue to see growth opportunities as they elevate life with every glass raised by perfecting their brand portfolio to stay ahead of consumer trends. Thank you.